So, Jakob, first of all, thank you so much for taking the time to speak with us today. Whereabouts in the world are you joining us from?
Luxembourg.
Excellent. Very good, very good. Well, straight into it. Are the traditional financial institutions now able to fulfill the ever-changing needs of its clients in this digital age?
Yeah, but we have the situation that a number of different type of banks we meet during our daily work. But if I should categorize them, I would say we have typically three type of banks. We have the small and smaller regional banks, which are typically in a situation where they have or are in the process of being de-risked, or they're losing via their global partners more and more capacity in the international space. And there is not enough evolution, there's not development from these big providers to the smaller banks. So we actually have a large segment of banks which are losing access to an international world. On the other side, we have the large international banks or the global players. They are very much hung up on the agenda of trimming their global network. They are focusing on revamping themselves. They're focusing on establishing profitability, and they're focusing a lot on a way to come back into the market, being able to develop and deliver. But they are hung up on profitability, and thereby we have this situation that they have to lose costs, and the costs can only come by losing customers, because they have tried to get rid of their legacy IT, but that legacy burden is a really big burden for these big banks. But there are some of these banks who are actually trying to do something. And then we have, unfortunately, a segment of banks who simply haven't acknowledged what is happening. And that is kind of the three tiers of banks we are dealing with. I think it's very clear what the market wants. The market wants instant payments, they want quick resolution, they want effectivity, they want transfer payments to be completely transferable. But we also need to match the regulations and the governance around payments and accounts and client relationships. So the consequence of that, it's a major battle, I think, for all parties in this, especially on the backbone of the legacy. So what we are seeing is now that roughly 80% of retail banks and 74% of wholesale banks are still in a situation where they're dealing with a good old classic correspondent banking framework. But there are still more and more of them coming in with the ability to work, or the wish to work with other parties like ours. So our ability to give what the market are looking for, the experience we have and the history we have of building quick solutions to the market actually enables these banks, or some of these banks, if they come and work and partner with us, to develop and also together with us develop tailor-made solutions, which will bring them to what consumers are looking for, what their clients are looking for. I think that's most of it, yeah.
Oh, I don't know. I love it when you send a payment and you've got to wait 2 weeks for it to clear. I mean, that's the best.
Yeah, exactly. But and that's the big burden which many of these small these SMEs, mid-market companies, but I think all the different verticals in this, being the corporates, the private individuals, costs are high. It takes too long. You have no clue what is going on. And eventually you get a message from your bank that some kind of regulatory burden has stopped your payment. We have to get away from that. So as a consequence of that, the evolution that happens started with some of the fintechs and PSP who was less transparent, is now coming to the point with players like ourselves in banking circle, where we actually can deliver and are delivering complete transparent payments. And that's the basis of what is needed in order to be able to regulate and govern these payments and relationships.
Do you think that's something that is location and vertical agnostic? Do you think these are the same issues that are facing a retail bank in, say, Singapore, or a correspondent bank in the Netherlands?
I think it's very fragmented, because we see some banks in some areas are up in front and really following the developments, trying to keep pace. But I think it's more a question of a decision inside these banks. Do we want to change? Do we want to take that burden upon us? Do we want to go nearly back to the nitty-gritty details of how our system works? Because I think most of what we have today is a banking sector, no matter where we are globally, that are burdened by legacy. And in order to meet the ongoing requirements, both regulatory and product-wise, we need change. We need systems that are flexible. We need quick to market. We can see what some of the new participants in the fintech market, how quickly they're developing things, and how quickly some of them are actually also running into problems. And that is exactly why I see that the partnership between the good old classic banks with the good old classic correspondent banking and the new thinking, new developing, the smart way of getting things done is a must for the future. When we talk about the evolution, I think a lot of banks have started with a digital solution for their customers. They can easily do a payment domestically via some kind of smart app on the iPhone or smartphone. But what we are seeing today is that 43 of SMEs are using more settlement accounts, are using more currencies, more settlement accounts as signal of a wider scope of international need. We see that 43% of SMEs are actually not hung up on using banks. More are going to alternative solutions. And 85% of European SMEs find that the solutions banks are delivering are actually not satisfactory. So, and this is where I see the development happening, and what comes from the roots from the consumers and the SMEs will slowly evolve up through the chain, and eventually the big corporates will be starting using these solutions or similar solutions, tailor-made solutions. But if the banks cannot deliver the service, the quality, and especially the solutions which the consumers are looking for, they will find them elsewhere. And there will be an ability for fintechs to come in and take over that market. So if banks understand to partner and understand what their clients are needing, then they ought to be able to stay relevant to their customers.
Is the traditional correspondent banking model dying?
No, it's. I won't say it's a dying breed, and I don't think correspondent banking is something we will see disappear. I just think that it's a solution, it's a way of doing business, which needs to be re-engineered. We need to find a new way that we can work together as banks and other relevant parties to it. I think Banking Circle has developed virtual solutions and global clean solutions, which are straight up the alley of what a modern bank today need. And when I say a modern bank, that is because we see in our part of the Banking Circle, we see our job and our obligation is to service and help banks to help their own customers. So we actually have solutions where we can offer banks these solutions. We have virtual accounts which will give direct access and international access to local clearing in a number of economies and destinations. It is interesting to see that 60% of banks in UK, Benelux, and in the DACH area is already today considering working with other providers. That is a strong message, but we are just not seeing enough movement there. I think what is important here is we have to understand and know what the clients are looking for, and that is again transparency, low cost, efficiency, and then we need to understand what the regulators are looking for. That is strong, safe solutions which can be regulated and can be governed. And if we manage to put these things together and work too closely together, the financial infrastructure providers like ourselves and the banks, I still believe there is a really good chance. But the banks who do not understand that and believe that 5 days for a payment that cost you $50, that's not acceptable anymore. We have to bring it down to a instant next to nothing level. And that's what they're looking for. And we see it with the consumers today, and we will very soon also see it with the higher segments of clients in various banks.
What are some of the key elements required for a well-regulated and accessible global payment ecosystem that delivers instant settlement to meet the needs of the new and the traditional economies?
I think we are coming back to what is it the parties or the players in the economies or in this new financial ecosystem are looking for. I think many of these are looking for, as I already mentioned a couple of times, they're looking for a really cheap payment that is settled immediately or as quick as possible. They're looking for solutions where we know they are managed, they can be managed, they can be governed, they can be regulated. They're looking for transparency. They're looking for service at a level where they know they can get their payments done. They know they can get their payments fixed if there is issues. They need access to human beings even once in a while. But the importance is to have digital solution at a good mix of good old classic bank service and access to human beings. That is part of it. Another part of this is of course that they need banks who start to accept that there are clients who actually have different needs to what the banks are delivering. And I think that is also a very, very big problem in these days. And many banks are delivering solutions or having solutions which does not at all fit what their clients are looking for. And as a consequence, there is a ever-growing financial sector of fintechs and other companies. I don't think there would been much space for someone like us had it been for banks who've been able to solve their legacy issues, but also follow chase on the regulatory and governance issues.
Why are their banks still trying to charge quite large sums of money for what for them is a very low cost?
Unfortunately, I believe it's simply they don't have the ability to change the heart of their system, the heart of their procedures. There might also be a bit of a mentality thing in it that we have now done this for ages and this is the way we would like to continue it. Just the way many are talking about the different ways of connecting with a bank. SWIFT is still driving, the absolute majority of it, and there will still never be a need for SWIFT. But it is interesting that many other connections between banks and clients than SWIFT is actually, between banks than SWIFT is actually much better. It just takes more, and I don't think the banks are willing to invest in what it takes. And then we don't get the development, the evolution of the payment. And I agree with you. Go to many of the others. I won't mention names, but there are many who can do TransferWise, Revolut. Now I'm doing it, but many of them can actually do payments much quicker, much cheaper, and a quality which is exactly the same or even higher. We're seeing these big global banks that has been able to do everything, but if you want to do everything, you can't do it well enough. And the very big global banks, they're not. I don't think there's any of them who's very good at what they're doing, but they can deliver a reasonable solution. And if you forget about exactly that destination or that destination and just stay on a digital solution, it's much easier to implement. But how do you implement a digital solution if your legacy system is 20, 30 years old?
Exactly.
What are some of the barriers that small and medium-sized banks face in today's market when trying to get access to the traditional global bank for correspondent banking needs?
I think the biggest barriers is first of all the behavior of the global banks. I won't point at them and say anything negative because the global banks have to run a business case. They have to meet the governance and regulatory requirements. What we have during the last nearly 10 years been through an ever-going process of de-risking, demarketing. We can see the thresholds inside banks are going up for how much a relationship should return in order for someone to be a client. And it's even more when it's bank to bank or correspondent banking. as being a high-risk sector. So if we just start there, I think those who are maybe supposed to drive the train is not there. They are actually trying to cut off the wagons at the end of the train in order to make the train lighter. But on the other side, we do see banks, smaller banks, who has now come to the situation that they can actually, and then they have to connect with someone else. They start to talk to us or some of our colleagues, and they suddenly get solutions made available for them where they actually no longer need the global banks or need them to a much less. And that I find extremely interesting. And that is where I think correspondent banking is going. Correspondent banking will be a mixture of the good old traditional one, but has to be made modern. And then these big banks will start work in different ways with parties like us. We are already partying with correspondent banks, both on a modern but also a more old-fashioned way. But by combining our new solutions, our smart solution, our virtual solutions, we suddenly get ways of getting access, international access on local conditions. And that's quick. That is a quick payment. That is a cheap payment compared to a cross-border. But I cannot see a financial sector where correspondent banking does not exist. But I just believe it's gonna change over the next many years. Driven again, as I said in the beginning, driven by the consumers, the SMEs, the mid-market clients that comes with the basic needs, and these basic needs will evolve as they grow, and thereby comes the solution for the bigger clients.
With a growing emphasis on both local and global real-time payments, what can banks and third parties do to move away from the traditional SWIFT payments to allow for this instant cross-border settlement?
No, but I think the best banks can do today is to start work with the fintechs that has these solutions. Our virtual solution, where we use actually a very old-fashioned classic SWIFT network, but providing access to local payments without being there locally. That is one of the key ways where we today see we can take a client sitting in one country who got access to payments locally in another country, both payments and collections. And these solutions go from being cross-border, 5-day worst case, to suddenly become a 5-second settlement on the local clearing system. That I think is the ways banks and the fintechs can work closely together, and thereby we can actually get it. Else we will have to see banks teaming up all around SWIFT as the tool, and that's going to be very, very difficult. It's going to take a very long time because these banks cannot agree on anything in the long run. I think that's going to be very, very difficult.
How is this going to improve the convenience of cross-border and currency payments?
We will see currency payments and cross-border payments. In reality, I think we will see the ratio of cross-border payments, currency payments, multi-currency payments, whatever we call this, we will see that go down. We will see the ratio become less and less because more and more transactions, more and more payments can be settled domestically. What happened with SEPA and the way the European payment zone at that time was established and became a nearly instant settlement zone, call it today, but I think we will see more and more of that coming up. And a payment going from, why should a payment going from the US on the same internet take 5 days compared to a payment going from a neighboring country? Does it make sense?
Well, because I mean, you can send a movie file, you can download a movie file that's many gigabytes, and I mean, surely it's because of the size of the file. Because a payment file, those ones and zeros must be terabytes to take so long.
Yeah, exactly, and it's just data. Payment is just data, and that's what the banks need to understand. That's what SWIFT needs to understand. That's what we all need to understand. That as soon as we have packaged this data in a good, smooth way, and we have the access in the case of the payment, we have the access to a local clearing in whatever country, then we can actually bring a cross-border to become a local payment. And that's the biggest differentiator of what we are doing today compared to a classic correspondent banking solution. And who won't have his payment back or his payment out same day, 10 times the cost? I don't think there's anyone who would do that.
Does your bank have a clear policy on partnering with fintechs and you disrupting banks?
I don't think we have a policy, because already by saying having a policy, I think you are limiting yourselves in what you want to do. Our view is that we want to find the best solution for our customers, being it our payment gateway customers, PSP-like customers, as well as our bank customers. And if that takes us to go and partner with another fintech or partner with a bank, that's what we want to do. Yes, we are here disrupting. Yes, we are here to bring evolution and innovation to the floor. But we are not here just because we want to do that. It is the mixture of deep knowledge about how things work, plus on one side the whole market and knowledge about banking, combined with the clever people sitting in our development organization, in our IT organization, putting these things together and then partner up with different banks. We already do it today. We are in partnership with several banks, and we are in partnership with other institutions, and we will continue that route until we find the right way to get a thing done. I think again that's a very different way to working in a classic bank, because in a classic bank you would typically hear more of the things you can't do, while we see a challenge and we see an opportunity. We want to guarantee that by the partnerships we're having, we have good products and solutions. And my clients and our clients are the banks, and if we deliver good solutions to the banks, we also deliver good solutions to their customers and their clients, and they have clients they work with. And at the end of the day, it becomes a question of what we do for the global economy. So I know we would never limit ourselves in any way.
Very good answer there.
Yeah, but if I should add something, but we would never ever compensate on the transparency. We would never ever compensate on meeting the governance and the regulatory requirements, because that's just a must. The first time we are not meeting any of these regulations, we are out of the game.
With regulatory governance expanding at a steady pace and businesses increasingly becoming global, while also at the same time becoming more instant, how do you balance between regulatory compliance and the client demand and sophistication?
We are back at the legacy issue. We are back at the issue of what can you do with the systems you have today. And talking about us, I think we have been able to build systems from scratch. We have a lot of experience from the first years working only with payment gateways, payment aggregators, PSPs, and so on. That has given us an ocean of information and knowledge how to get things done. Now we are activating a new vertical, being working with banks, partnering with banks, and that is a vertical with much more regulations and governance. But we have systems where we can establish tailor-made solutions, modules, whatever they are called. Everything we have done has been built from scratch. It's up in the cloud. It is full of flexibility. It's full of scalability. And on top of that, we are applying a lot of artificial intelligence. We are applying machine learning. So when you look at all the new requirements put on us, because we now work with banks, but also working with the payment gateways, it is not a question of what we cannot do. It's much more a question of the challenge we took on us and how that actually is guaranteeing that what we're doing is the right thing. And we're meeting requirements, we're meeting the governance, but at the same time, we're delivering solutions to the clients which they like to see and which they can use. So I don't think we are walking a thin line. On the other side, I think we actually guarantee that our clients, be it banks or payment gateways and so on, that they are getting what they're looking for. I think that's the kind of the answer to that question.
Absolutely, because I mean the two are completely not mutually exclusive. You want that's I mean you can increase increase the sophistication of what the client is demanding, whilst at the same time being on board with the regulator.
And that it is clearly documented in how we have developed, and over the last couple of years, the growth we have seen, but also the product development we have done, because the growth has also come because of the expansions in products and solutions, but especially that we can scale, and that is exactly what we're doing today. We are listening to what the customers are asking, and we are delivering it. We are framing it in the right way. We're packaging it the right way, so we are meeting both the client requirements, but at the same time, governance and regulatory requirements.
What do you think correspondent banking as a landscape is going to look like in, say, 3 to 5 years from now?
And we touched that subject in a few questions before, but I think there will be typically two types of correspondent banks: those sticking to the old traditional parameters way of getting things done, and I think that's unfortunately be the banks who, in the long run, will be the losers. I think the winners of this game will be those who is capable of listening to the customers, is willing to take the burden upon themselves to change, are willing to follow change, are willing to listen to what is happening down between the grassroots, because that is where evolution comes from. And that is in our sector, that's the SME clients, that's the consumers. And if we can follow and make solutions available for those, it's easier also to start develop bespoke solutions for the higher verticals or sectors in banking. We need to be able to service each other. The winners will of course be the customers and the consumers, because at the end of the day, if I buy something in e-commerce, the merchant will get his money 10 times quicker if it comes in via these new smart solutions than via a classic cross-border payment via a correspondent banking network. So at the end of the day, I would say we are all winners, but those who do not acknowledge the change coming, they will be the losers. But I prefer to look at the way we can win together, both the clients, the banks, and at the end of the day, the economy.